Good morning, everyone. We are live and with you. It is just a minute before starting time, so bear with us. I still see folks joining. We're going to give them a little bit of time, not too much time. We want to get started promptly today to make sure we're respectful of everyone's time, including our presenter. Today we're joined by Mary Jane Law. We'll be underway shortly. Hang tight, folks. All right, everybody, the time has come. I am Michael Kotzenmoyer. I'm your humble host today. I will not have the duty of presenting, so I'm off the hook. Mary Jane Law is our presenter. She is an assistant vice president. She's senior underwriter and product leader for today's topic, which is property managers package product. So we are thrilled to be joined by her. Before I turn over controls and the presentation to her, I'm just going to go over some logistics, as I often do, give you a little bit of context for today's session, and then step out of the way. So as you can, I should share my screen, shouldn't I? There we go. As you can see now on your screen, our topic today is property managers. And if you've joined us for any of the recent joint webinars with USLI, you know that we're kind of trying to put a spotlight on lesser known products. Most of our customers, I think it's fair to say, know a little bit about USLI and their Main Street appetite and that sort of thing. But many are unaware of some of the more niche products, this being no exception to that. And so we thought it would be good to give you a deep dive into the product, and that's why Mary Jane's joining us, because I'm not capable of that. But this product is probably relevant for some of you, if not all of you, in the sense that if you're writing personal lines property, maybe schedules of property, perhaps you're writing apartment buildings or other commercial property, you may be interacting and dealing with property managers. And so you may actually have opportunity to use that as a cross-sell or perhaps even market to them from scratch. So you'll also notice that, forgive me, I missed one thing. Everybody's in listen-only mode, so as always, if you have questions, we welcome those. Just enter those in the questions section of the dashboard. We'll answer those at the end, just to make sure we're, again, respectful of everyone's time. Moving on, there are 3 handouts that you can download at any time from the handouts section. One is a point of sale piece that could be helpful in marketing to property managers. Those we can customize. If you plan to make some effort toward that, we can provide those to you with your logo and of course agency information. The other handout you'll see there are some claims examples that Mary Jane will actually be talking about during the course of the presentation. So those are just helpful to kind of understand some of the exposures that your property manager or prospective clients could face. And then the third handout is the actual application for the property manager's product. So I thought that might be handy. You can get that on our website. And I am going to, in fact, show you where as part of my introduction here. I think we've covered most of the logistics, so let's move to agenda. I'm going to leave it there, and I'm actually going to exit the slideshow really quickly just to show you on our site here a couple of quick things before I turn it over to Mary Jane. Okay, so from our homepage, first thing I want to show you is go to your dashboard. You have to be logged in here, but this product can actually be quoted online or by phone. Now, not all risks will lend themselves to that method. You know, as you get a little more complicated, get some more moving parts, you may be better off with the application. But I did just want to point this out. And the other reason this is handy is if you're unsure of what information you'll need for a quote for this type of risk, the online quoting platform is a perfect place to derive that information. If you go through and do just a dummy quote, pick your state and coverage you like here as part of the package, you will see these are the questions that you'll need to answer in terms of rating. So The online system is set up in such a way that it's only asking rating questions up front before you get to all the qualifiers and the eligibility. So that's one thing. The other thing is the application that is available for download in the handout section now can also be found in the forms section on our website. As always, scroll to the bottom here, it's alphabetical. You'll see USLI product applications, and then you've got a whole slew of product-specific apps. So that is pretty much the extent of my spiel. I am going to now turn it over to Mary Jane. Are you with us?
I'm here. Thank you, Mike, for having me.
No problem. Thank you for joining us.
I didn't get that pop-up, though, too.
I'm doing it right now. Look
okay.
Right now.
there it is. Go. Thank you. Okay. Good morning, ladies and gentlemen. So I'm going to go over the presentation, and this is our agenda. We're going to discuss opportunity exposures, why USLI, the competitive landscape, how you can drive the business, and then again, as Michael alluded to, some marketing material, as well as our Business Resource Center that is available to all policyholders. So this is the Property Manager's Professional Liability Package. So as far as opportunity goes, you can see in 2017, the U.S. Department of Labor stated that there's approximately 317,000 property, real estate, and community association managers. Most states are now starting to mandate licenses for property managers and/or they demand that they have a broker on board. For example, in 2015, Colorado, which is a state-mandated state for real estate, now says, hey, if you're a community association manager, you need to be licensed by the state and carry E&O. So in 2014, my Colorado book just boomed. Of course, it's a revenue maker for Colorado. But like California and Nevada, they want brokers on board. And if you have a broker on board, they're going to want E&O. So as more states roll out saying, hey, you need to have a broker on board, I just see the opportunity growing. So we do property management for every type: apartments, condos, vacation, mobile home parks, and some commercial, office, retail, industrial, and self-storage. So their exposures under the errors and omissions, their biggest exposure is mismanagement and/or diminished value, as well as wrongful eviction, especially if it's a residential property manager that's making that decision who's going to rent the apartment and/or the unfateful day that they have to actually evict someone. And then if you're a property manager and you do property showings to potential tenants, or if you also do real estate sales and you do open houses, you kind of have a bodily injury property damage exposure. So we'll give a $50,000 sublimit for that coverage under those circumstances. Another really big exposure they have, and I'm going to really drill down on this one, is discrimination. Over half of all the discrimination claims that are made for fair housing are made against property managers. And all property managers have this exposure regardless of the type of properties that they manage, because we're seeing an uptick in even homeowners that live in community associations. They're putting in discrimination claims. We can also package this with EPL for the bigger property managers that might have a lot of employees. So discrimination claims are on the rise, and these claims are more severe than a claim of negligence or mismanagement. And typically, a defense cost for this type of claim can be up to $100,000. Now, they're on the rise for a couple reasons. The first reason is HUD actually goes out and funds nonprofit housing organizations to put testers out in the marketplace to see who is actually discriminating against a protected class. And when I say they fund them, they fund them to the tune of, as you can see here, in 2013 they allocated $24 million. That's pretty aggressive. This is their website. I just have this up here to show you how aggressive they are in fighting fair housing. As well as this. This was a full-page ad that they took out in the New York Times. So you can see how HUD is actively going after discrimination. And you know what, folks? You would think in 2019 that discrimination wasn't as rampant as it is. I actually think it's worse than it ever has been. Here's some claims examples. I know it's very small, it's hard for you to read, but for example, mismanagement. A property manager was working exclusively for an apartment complex and guaranteed to get tenants. And there were a lot of scenarios, construction up the road, businesses closing, and 6 months afterwards, only 50% of them were rented. Well, the owner of the apartment building sued the property manager for mismanagement and not doing his due diligence in renting those apartments. And also, conversely, for discrimination at a condo association, a Spanish man wanted to discriminate. He wanted parking because he was disabled. Well, they didn't give him a closer parking spot to his home. And in fact, they were actually giving him citations for parking where he shouldn't have been parking. So he sued the property manager of the association for discrimination based on a disability. Another reason these claims are so much on the rise is the ever-evolving definition of a disability. At one time, it's so easy to see the person in the wheelchair or the man with the seeing eye dog. People can get their heads around that kind of disability, and you know they're going to say, oh, we can't accommodate you because obviously they're disabled. But now you have the war veteran coming home with post-traumatic stress disorder that needs an emotional support animal to keep them from going over the edge. Well, property managers can't get their head around that type of disability because they can't see it. So the war veteran says, I have an emotional support animal. The property manager says, sorry, I have a no pets policy. Boom. That's in violation of the Fair Housing Act, and they put in a claim. There were approximately 28,000 housing complaints in 2017, and 57%, almost 17,000 of them, involved discrimination against a person with a disability. So you can see how rampant it is. So on this product, we can package it with general liability and BPP. Now, my general liability is going to cover their office and any off-site business errands, such as if they go to the bank or they have a trade show and the venue says, look, you need to have the GL for your trade show. We will cover that. It won't go to the properties that they manage, though. That is just not a GL exposure that we're willing to take on. We can also give hired to non-owned on this, which is becoming more and more contractual. However, if they're doing real estate sales, I probably won't give you hired to non-owned. Just about in every state, the GL with hired to non-owned is going to be on an admitted basis. So this product is a great niche product because there's 5 coverage components, and you can tailor this product to the needs of your property manager. So the only caveat is you have to purchase the errors and omissions, but then you can get the discrimination coverage, the EPL, the GL, and the property. So you can buy all 5 coverage components. You can just buy the E&O, the discrimination, and the GL. You can tailor it however you want. So again, this is just all the types of properties that we have property managers for. Vacation, of course, is my golden child because there's hardly any of our claims for them. But condo and homeowner associations is my biggest class. California and Florida being my biggest states for them because they're so heavy in community associations. And then the Business Resource Center is a great fit for this product, especially if they buy the EPL, because then they can take advantage of the human resources that's available on the website. Or if for the tenant screening, they can get discounted back coverage. So it's a nice way to round out your sale, especially for the smaller property managers that might not have a lot of resources available to them or the funds to pay for the resources. So as far as the competition goes, most of the competition does a miscellaneous form, and they endorse it for this class. Mine is actually tailored specifically for this class. The competition, they give discrimination limits, but it's a subset of the E&O. So if there's a discrimination claim, it's going to erode the errors and omissions limits. Mine is its own set of discrimination limits. So when there's a discrimination claim, it does not erode the errors and omissions. And we will also give coverage for the management of 100% personally owned property. A lot of the competition considers that a conflict of interest because remember, the biggest exposure I said in the beginning of the presentation was mismanagement. And the competition figures they can't sue themselves for mismanagement, which is true, they can't. However, they still have that wrongful eviction exposure, which is covered under the E&O, and they still have the discrimination exposure. So in 2010, when the market tanked and the marketplace was flooded with foreclosures, a lot of property managers bought up those properties and built their own portfolio. And we, in turn, saw an increase in coverage for 100% managed owned property. So that's a nice coverage advantage. As far as cross-selling, as Mike alluded to earlier, if you have a habitational book, apartment owners, they all have landlords and or property managers that are managing their buildings. So you can cross-sell it to that. And another perfect cross-sell, if you have a big community association GL book, just about every community association has a community association manager that enforces the covenants, takes the fees, does the minutes at the board meeting. And I have a nice, Mike can share this with you later, there's a nice cross-sell piece of actual claim scenarios against community association property managers. A lot of them think, I don't need E&O, I'm going to be covered under the D&O of the community association. Well, that is true, but only in respect to a homeowner sues the community association and the property manager, then the D&O is going to defend the property manager. But what's going to happen if the board members sue the property manager for mismanagement or non-fiduciary responsibility? That D&O is not going to defend that property manager. That is why he needs E&O as well. You can build the book with targeted lead lists. And again, this is one that's just easily quoted on the web. So you can do it that way as well. So coverage highlights, the E&O, of course, is defense outside the limit, very important. The tenant discrimination is defense cost inside the limit. But remember, folks, it's its own set of limits. The EPL will be defense outside the limit if you buy $500,000 or higher. And probably only about 10% of my book buys the EPL because we write smaller property managers, but we still do bind at least 10 to 15% with the EPL. We'll give you internet coverage. There's that personally owned property coverage. The real estate sales activity. So you have a property manager that dabbles in real estate as well. And then you have that real estate agent that dabbles in property management. So at one time, I was never able to accommodate that property manager that did real estate sales in California because we don't write real estate sales in California. I now had that changed. So in the past year, if you're a property manager in California and Texas, and you also do real estate sales, I can now accommodate and cover both of those services under the one policy. Again, with the wrongful eviction, that's included at no AP. And of course, we give the disciplinary action coverage. So here's a discrimination claim, and I'm going to let you read it, but this is one where the gentleman owns his own property. So after you read this, I'll explain. So now, even if John followed every letter of the law and has excellent documentation of the credit history and the bad credit and the good credit, even if he has all that documented, if there's an allegation of discrimination, Fair Housing, they're going to HUD, they're going to go out after John. And if John doesn't have this coverage, guess what? He's got to take the time and the money of his own to defend himself, even if he's not guilty. Here's another one for John. I'll let you read this one as well. Now, again, every state has strict uh, eviction processes. So even if he followed every letter of the law in evicting this tenant, if they allege wrongful eviction, if he doesn't have this coverage, guess what? Once again, he's going to have to defend himself and take his time and money. That takes away from his business. So if someone who says, well, I own my own property, I don't have an exposure, these two claims examples are perfect ways to convince them that they absolutely do still have an exposure. So the property manager's product, you have the stability of A++. Again, admitted in most states, that's with the GL as well. The 100% personally owned management. And one other thing we do is we'll give additional and automatic additional insured status for any client that the property manager agrees to render professional services for. That way you don't have to worry about scheduling the clients. I don't have to worry about it. And if you're a community association manager, most condo associations want to be listed as an AI on their insurance. Again, it's admitted in most states. It's eligible for direct bill, eligible for auto renewal. Web quoting is available. And then we also give a pre-filled application that goes along with the quote when you do it on the web or when we actually even quote it, which makes it much easier for you to get the applicant to assign an app to sign, complete, and get back to you in a timely manner. Marketing, what can we do for you? Once again, as Mike alluded to, he has pieces that he can customize for you. And I'm sure even this presentation, if you have colleagues that you think would benefit from this that weren't able to attend this presentation, the webinars are available as well. Here's a little bit about our Business Resource Center. Here you can see the human resources. So they got the EPL, but they're a small little guy. They only have 3 or 4 employees. Don't really have a business human resources department. They can utilize these services. Same thing for pre-employment and tenant screenings. They can take advantage of the low cost, the discounts that they get there. Their own identity theft protection. And there's just a lot more. It would be in your best interest to go onto the website and just take a look at everything that they absolutely have on the Business Resource Center. So the Business Resource Center can just help you grow your business. It'll help you strengthen your client relationship, and it serves as a good vehicle to cross-sell or upsell other lines of business. It can increase your ability to bind at the point of sale as well. And it's helping you compete on more than just price. It's the entire package that you want to sell. It's going to save you time, money, and certainly peace of mind. And with that, that is the end of my presentation. So Michael, I give it back to you.
Awesome. Well, thank you. You moved very quickly through a lot of information. So
I hope I didn't go too quickly.
No. I think it's great. I think people appreciate that. You know, they get the information, and then if they need the presentation, we can certainly send it to them. I see a few people asking about that, and yes, we will definitely send it to you if you've requested it. I also want to remind everybody before we get to the Q&A, there are some handouts available for your download right now, claims examples, point of sale piece, as well as the application for the package. Mary Jane, you ready for a couple of questions?
Sure.
All right. Well, I have one. I think people are still typing, so I'm going to give you mine. And sorry if this is in the weeds a little bit, but you mentioned along the way that the wrongful eviction was covered under the E&O portion. And typically, you know, correct me if I'm wrong here, personal injury coverage is found under the CGL. So I'm guessing you guys exclude the personal injury on the GL side and pick that up on the E&O. Is that correct?
That is correct. We exclude the personal injury and advertising injury on the GL, but we give it back under the E&O.
Okay, so the E&O is kind of the core of the package because it's given you that coverage for wrongful eviction, slander, invasion of privacy. Is that right?
Correct. Even if you don't get the GL, because they still have that exposure.
Right. No, so that's important to note. So, folks, if you're trying to make the sale on the E&O and the property manager says, well, why do I need that? That's a perfect example. You know, those personal injury exposures are picked up on this E&O. So it's an excellent way, even if they don't want the package, maybe they don't have BPP and they don't have employees, so they don't need the EPL. That's an angle to take. Right. All right. So I do see quite a few questions. I'm going to run through those that I can quickly answer so that we can get to those that I can't. Somebody's asking, is this offered in California, running into a tough market? Yes, absolutely. California is our bread and butter. Okay, here's one for you, MJ. Not sure. This might be more of a legal question, but I'll toss it to you anyway. So what happens if the owners have a property policy that excludes vicious dogs? You mentioned, no pet policy, but what if there's something pertinent to vicious dogs? Is this unlawful?
You mean if it was a disability?
Well, I wasn't sure the context of the question, so maybe you can just speak generally to that.
Well, they don't define. I think a vicious dog is different than what would be an emotional support animal or a qualified service animal. But that's a really fine line. It's always going to depend on how the property manager approaches that person that says, hey, I have an emotional support animal and it's a pit bull. If he denies it because it's a vicious dog, that's going to be completely different than if he denies it and says, hey, you can live here, but we have a vicious dog policy, so you have to get a standard emotional support animal. But that is that's a shady area. I'm not really sure. It would depend on how the claim was presented as to whether or not there would be defense for that.
Yeah, I figured that one was a bit of a gray area. All right. So this is actually kind of a neat question. I hadn't thought of it, but someone's asking if we can offer this coverage to property managers who live on a property in exchange for services, which I've heard of before, and where they don't pay rent but they manage an apartment building. Do they have the same exposures?
Yes. And we would be able to write that. We have to rate on something. So if they're not being compensated money-wise, but they're being compensated with free rent, you would just assume that their paycheck would be what the rent was each month for the year.
Right. That makes sense.
But yes. Mm-hmm.
Okay. So we've got, let's see, sublimits for contingent BIPD, bodily injury, property damage caused by the property manager, ? I think they're just asking if they heard correctly.
We are only going to give that $50,000 sublimit for BI or PD if someone is injured during a property showing, meaning they're showing a potential tenant a property, they trip over the throw rug, they bang their head on a table, we'll give $50,000. We're not just going to arbitrarily give a $50,000 sublimit for every BI or PD that occurs at each property that was managed.
Right, so it's specific to showing. Got you.
Property showing or open house if you're a real estate agent, or if someone enters a rental house via the use of a lockbox and does damage, we'll give a $50,000 sublimit for PD.
Got it. And someone's asking if the GL covers the insured's office. I think you mentioned that it does, right? It's the office and properties that are showing where it has that sublimit. Yeah,
well, the $50,000 sublimit is actually covered under the E&O. So if they don't buy the GL, they still have that $50,000 sublimit. But the GL is going to cover their office space, and it's going to cover them. Let's say they go to the bank and they put their briefcase down and someone trips over their briefcase, and the bank manager says, Mr. Property Manager, you put your briefcase in the middle of the floor. Someone tripped over it. I don't want my GL to respond to that. Our GL would respond to that.
Got it. Someone's asking about whether you'll accept risks that have prior claims. How do you treat that?
It would depend on the nature of the claim, the payout of the claim, and how many there are. But yeah, I do write them where they have claims. This is a really tough class from a claims perspective to begin with. So I often see them with claims. But if it's a real severe claim, or they did not put remedial measures in place that make sense to prevent another claim like that, then maybe not. But I can write them with up to 2 claims in the last 5 years.
Okay, thank you. Boy, we're getting a lot of good questions here, so I'll try and speed through these. Someone's asking, does it cover sales and management? I think you did address that. That's a yes, right? We can cover real estate sales.
Yes, we would endorse it.
Got it. Okay. See, so I'm not sure I fully understand this question, but I'll read it off to you, and maybe you'll know what they're talking about. So, if HOA board hires the property manager, can this policy be added to the HOA GL/E&O policies? I'm not sure.
No, they would be two completely separate policies, because
what we're talking.
This is going to protect.
What we're talking about is right. I'm sorry, I didn't mean to cut you off.
No, that's okay. This is going to protect that property, that community association manager. But
right.
the community association, if the community association gets pulled into a claim as a result of something the community association manager did, because we give additional insured status automatically, we would defend our property manager and the community association.
Right. Okay, so there is a dual benefit to that.
Correct.
Got it. All right. Someone's saying, I have a client that owns 3 homes she rents out. Would this be a case where she would also need... No, I would say no. She's not really a property... but I guess you did say that you can have 100% personally managed properties, right?
Oh, absolutely. She still has that wrongful eviction and that discrimination exposure. And that's exactly the situation that they need this coverage.
Right. Okay. Yeah, I guess I'd never considered somebody with that few homes, but hey, it can happen to anybody.
Yeah.
So. Okay, let's see. Make sure Joe someone's asking about GL, whether it covers personal and advertising injury. Yeah, typically it does, but what we're talking about here with the package is actually shifting that over to the E&O side. So in case you missed that, that is how it's treated here with the package. Because obviously you won't want to cover it on both. That wouldn't make
Correct.
sense. So, let's see. What does up to 100% coverage available for management of owned properties? I think we just touched upon that. It's just where they own all the properties and they manage them themselves. So it's just owner acting as property manager. Price. Someone's asking about pricing. Do you? I guess Mary Jane. Do you want to speak to the competitiveness? You named some competitors earlier on.
Yeah, we're very competitive in pricing. Revenue of $200,000 and less is going to result in minimum premium. So, like for example, in California, if you're a community association manager, you're going to be able to purchase the $1 million E&O and discrimination limits for about $1,400. If you're a property manager that is doing apartment management and you're actually making those decisions, who's going to rent, et cetera, that's a slightly higher exposure, and then your premium could be close to $1,700.
Okay. Someone's asking about, property manager that does incidental real estate sales. If they have the USLI policy with the endorsement, presumably, would they still need a separate real estate E&O policy?
No.
Yeah, that would be overkill, I suppose.
Right. Right.
Someone's asking how far back you can go on a retro date, assuming, it is claims made, of course.
Assuming it's claims made, I will match any retro date. If they have full prior acts, I'll give you full prior acts, but I will match any retro date. The only thing you can't do with this product is you cannot buy a full prior acts if you currently do not have insurance.
Okay. That's good to know. So retro is inception if you're brand new out the gate, right?
Correct.
Got it. Okay. Wow, that was a lot of good questions. Thank you all for chiming in there, and hopefully the others who didn't ask questions were benefiting from that. Okay. Well, we've kept to our aim here of about a half an hour long. As a reminder, as you see on your screen, you can send submissions to Nicole Weech. You can certainly contact our office for more information by phone or on the web at jebrown.net, or reach out to your regional sales manager for marketing materials. If you know who that is, by all means, they can customize those for you. If not, just call our office. I want to thank you all for joining us and thank Mary Jane Law for all her expertise and knowledge on this topic. We are going to cut you loose, folks, and we'll see you next time.
Thank you for having me. Bye.
Bye-bye.